Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 178, and today we are going to talk about some definitions and to how to understand this current and maximum drawdowns. We've been talking about drawdowns since a few sessions, and to my surprise, a lot of people don't know about it still. So we'll cover this in this small daily bite today. But first, a look at the markets. So autos, which have been building up gradually in the last couple of weeks, was the biggest gainer in the market today. The market has broken its sort of downward move of the last 4 or 5 days today and has moved up. Autos went up 2.2%. Metals, on the back of strong overseas cues from China, up another 1.9%. Private banking bounced back 1.7%. IT stocks bounced back after a while at plus 1.3%. Nifty overall closed at plus 1.1%. So overall, a very good day of recovery, partly at least, of the losses of the last week or so. For the last 1 week, Nifty is still down minus 1.8%. And some of the sectors that have really gone up very well this last 1 week have been metals at 3.6%, and autos virtually no loss in the last 1 week or so, and of course also commodities with good results coming from National Aluminium, Hindalco, etc. So real estate has been the major sector which has been battered in this last 1 week, but overall it has done very well in the financial year so far, with metals still leading the pack on 1 month and 3 months and financial year basis for the market. So all in all, a good day. Some recovery from the battered past 1 week. In terms of the breadth of the market, small caps did not budge much, up only 0.3%, and mid and small cap index up only 0.8%. So the broader part of the market was not as enthusiastic as Nifty. But nevertheless, the advance decline was heavily in favor of advances today. In line with these index movements, weekend investing small cases also did quite well, ranging from 1.7% to about 0.6%, and MI20 doing badly, actually 0.18%, but most of the strategies doing near about 1% or more, and covering most of the losses of the last 1 week. MI35 and MI20, which are predominantly mid and small cap stocks, have been lagging this move. So we did a poll on our Telegram channel that do you know how to interpret current drawdown and maximum drawdown of a strategy? And I was very surprised that, despite so many videos and blogs that we've done about this, only 23% people said yes, they understand this, 36% said they have no idea, and 42% said they know something partially. So we thought that we should spend more time in daily bytes in covering definitions and the basics of how to use small case, etc., because that aspect still seems to be the weak end in terms of the understanding of most retail investors, and that's why we are doing these daily bytes actually. So just to recap, we've done 4 videos on what is a drawdown, what is a max drawdown, what is a ROMAD ratio, how to avoid drawdowns is key to success, how to calculate drawdowns, and the Drawdown Conundrum very recently in episode 161. Links to all these videos I am providing in the description below, so please go through all of them if you don't understand what is drawdown and how to sort of maneuver yourself around the drawdown. And in this video we will try to understand what is current and max drawdown through a journey of a strategy. So let's say we have a strategy which starts at 100, and in year 1 portfolio goes from 100 to 200. In year 2 portfolio goes from 200 to 150. In year 3 it goes up, down, reaches 250. Year 4 250 to 200, and year 5 200 to 350. So starts at 100, ends at 350. So start capital is 100, end capital is 350. Total returns is plus 250% on original capital. We are assuming this is a lump sum payment, one-time investment and not a SIP investment. And the max drawdown is calculated as what is that maximum drop from any point that we have seen in the journey over a period. Let's say our period of calculation is 1 year. So what is the 1 year drop that we have seen from any point to any point, maximum drop? So there were two drops, the two larger drops going from 200 to 150. So that's 25% drawdown. The second one was going from 250 to 200. So that is 20% drawdown. So you always calculate the drawdown basis the highest value you have achieved and what is the percentage drop from there to the lowest point. So there were two drawdowns, 25% here and 20% here. Let's also see it in tabulated fashion, how this would have happened. So starting with 100 rupees, year 1, let's say you go from 100 to 200, profit loss of 100, plus 100% returns in that year, no drawdowns. Current drawdown is also 0. Current drawdown is basically for that particular period. If you are looking at on a yearly basis, then what is the drawdown in that year from start to end? And max drawdown is over a series of these periods, what has been the maximum drop that we've seen. So for this period, so far, for year 1, maximum drawdown is 0, current drawdown is 0, absolute returns is plus 100%, CAGR is plus 100%. Year 2, 200 comes down to 150. So loss of 50 here from 100, from 200 to 150. Returns in that year, you're down 25% from 200 to 150. So your returns is minus 25%. Maximum drawdown so far is this maximum loss that you've seen. So minus 25%. Current drawdown is also same because we are only seeing for this current year. So current drawdown for year 2 is 25%. Max so far is also 25%. So both are same. Net absolute returns so far, original 100 going to 150. Original, yes, so absolute returns is 50% and CAGR over 2 years is 22.5%. Year 3, 150 goes to 250, profit of 100. Returns in that year, 150 going to 250 is plus 67%. Current drawdown for this year, there is no drawdown as it has gone from 150 to 250, so current drawdown is 0. Max drawdown, however, will be max of all the years so far. Net absolute returns 150 to 250 is plus 150%, or sorry, 100 to 250 is plus 150%, and CAGR calculated is plus 35%. Similarly, for year 4, 250 going to 200, loss of 50. In this particular year, you are losing 20%, going from 250 to 200. So your current drawdown is 20%. Your max drawdown is highest of the max drawdown so far and the current drawdown, which still remains at 25%. Absolute returns going from 100 to 200 is 100%. CAGR of over 4 years is plus 18.9%, and so on and so forth. So last one also where you get this. So you will get the idea, is very simple math, but you must distinguish between current drawdown, which is for the current period, in this case any 1 year, and max drawdown, which is over a series of periods from any peak to any trough. Now let's also look at these metrics on our current running strategies. So this is available on the Weekend Investing Hub. If you go to the Weekend Investing Hub, link for which also I will provide in the description, you can see that all these strategies with current drawdown and maximum drawdown are shown there. So the top table is for the index, where you can see the current drawdown in most of the indices is between 5 and 7%, whereas the max drawdown, since this table is being tabulated since April 16, has been between 38% and 60% on small caps and CNX 500. I think there is some mistake here. This should have been small cap at 60%, but we'll really check that again. In terms of the products, again you have the current drawdown here. So we are seeing current drawdown in MILT CNX 200, which is larger than the current drawdown in the equivalent benchmark. MI35 is down minus 8%, MI80H is down minus 13.6%, and MI80H2 is down minus 19.28%. In terms of max drawdown, you can see that MI20, which is a small cap strategy, has had a max drawdown of minus 38%. MI35, also a small cap strategy, minus 33%. MI25 also should have a nice drawdown of minus 22.3%, so on and so forth. So you get the idea what is the current drawdown and what is the max drawdown over a period of series. So I hope this is helping you in your basic learning about the markets, and let me know if you want me to explain any more basic definitions, because all these things should be very, very crystal clear to you when you are looking at your investments, whether it is through weekend investing, small cases, or even otherwise. These basics should be extremely clear to you. Thank you so much for watching, and I'll see you in another video. Bye.